Welcome back to The Fix. Now, the free trade agreement adopted by most African countries would present an excellent opportunity to generate growth through trade. This plan was a key topic under discussion at the World Economic Forum that took place in Cape Town, specifically dealing with Africa. This agreement would create the world's largest free trade area once operational and is aimed at establishing a single continental market for goods and services. It would also include free trade and free movement of people. But given the trade war between the US and China, just how will such initiatives get off the ground? More importantly, how will it be financed? Vice President and Chief Financial Officer of the Development Bank, also known as the BRICS Bank, Mr. Leslie Maasdorp, now joins me from Shanghai to unpack his bank's plans in the deployment of fair trade and the development of developing economies. Mr. Maasdorp, a big welcome to you. Thank you so much. I understand it's 3 o'clock in the afternoon in Shanghai. Now, you've just gotten a AAA rating from Japan. That is quite an accomplishment, considering that you don't have much of a legacy. You're a much smaller player than players like the World Bank and so on. What does this AAA rating say about an alternative financial structure, specifically focusing on developing economies?
Firstly, thanks, Karima, for having me. You're right. This rating is quite significant for the bank, because when you look at the BRICS countries, the 5 BRICS countries, each of them have experienced sort of economic slowdowns. Each one has been, in fact, a number of them have experienced downgrades in their rating. Brazil has gone from investment grade to sub-investment grade. Even China was AA- and has since become a single A+. South Africa also, as you know, is still on the cusp of investment grade, but the environment has not been very positive from that perspective. The bank, though, has built very solid financial foundations, in other words, very strong credit worthiness. There's sort of very quantitative measures that these rating agencies use, and in their judgment, the biggest rating agencies, that's Standard & Poor and Fitch, they've given us a AA+ international credit rating, and the Japan Credit Rating Agency a AAA. Now, let me say, what does that actually mean? What that means in practice is that the bank is able to go to the debt markets, to the bond markets, and raise capital very cheaply, because a high rating means that the probability of default of that institution is considered very low. It means that we have the highest credit quality. We then use those funds, Karima, to on-lend for our projects. So we raise money cheaply, and we can translate that into lower loan prices when we build the roads and the dams and the ports and the infrastructure that our economies need. So the rating is very significant. It is an indication that the bank has now broken new ground. We are now one of the highest rated financial institutions in all of the emerging markets in the world. So that is quite something to be celebrated.
Now, of course, you've also got challenges. We've got the situation where a lot of countries that go to foreign institutions for financial assistance have to service that debt in the US dollar currency. That's the currency of the market. You've adopted a different policy. Tell us about it, and tell us how it eases the burden for developing economies in terms of servicing debt and accessing financial loans from your institution.
You spot on. Over the years, over the decades, actually, if you look at the World Bank, the Africa Development Bank, Asia Development Bank, all of these institutions, because the capital is in US dollars, they have in the main provided loans or grants in those US dollars. When the repayment has to happen, as you know, the emerging market currencies are subjected to fluctuations. There's more instability or volatility in emerging market currencies. So what that means is that eventually what looked like a very cheap loan in US dollar terms, because the interest rates on those US dollar loans appear very low at, let's say, 2 or 2.5%. But when you start paying it back, it becomes significantly more, because as your currency depreciates, and as you know, most of the projects in the member countries, these infrastructure projects, the revenues are also in local currency, which means that you have to now generate more local revenue to pay back that debt. So for that reason, We intend to provide in each of our member countries. We've already done that now in China, and we intend to do that in South Africa in about 2 months' time, where we will raise a bond locally in South Africa on the Johannesburg Stock Exchange, and the loans, for example, that we will provide to, whether it is for the upgrading of the Port of Durban, the loans that we provide to DBSA, Eskom, and other infrastructure projects in South Africa, we will provide some of those loans in rand, because it will lessen the burden of this foreign exchange mismatch, which I just referred to.
Now, can I ask you a direct question, Mr. Maasdorp? You have said in other interviews that you are not burdened by having dirty money loans. You are involved in the green economy. You are speaking to the questions of climate change and sustainable development. Are you going to be financing some of the IPP projects here in South Africa? Because I heard you on another television station saying you don't want to be saddled with coal loans, because that is an industry that is not going to take us far in terms of dealing with our carbon emission targets and so forth.
Yeah, look, I mean, as you know, the bank has a very strong green mandate. When the BRICS founders came together more than 10 years ago, they created BRICS, and a few years later created the New Development Bank. When we opened our offices in 2015, it was opened during a time of significant focus globally on climate change. As you know, the Sustainable Development Goals was adopted by the heads of state in about September 2015, 3 months after we opened offices here. Another 3 months later, the COP21 took place in Paris. So when we started out, the sort of idea of making our portfolio almost completely green was very much in vogue. And in fact, the heads of state at our first BRICS summit, when we were launched in 2015, suggested to the bank to start with a exclusively green portfolio. So the first projects that we announced, Karima, in April 2016, all of them were in the renewable energy space, 100% green. Our energy portfolio today also is still 100% green. We want to contribute to a cleaner air, cleaner environment, because it is not sustainable to continue with these coal-based assets in the long term. So in each of our countries, we will have specific initiatives, and we are only one institution, so we will contribute to a much broader effort. But in South Africa, obviously, the single biggest polluter would be Eskom, because of the significant coal-based power stations that we have in the country. But the country will need to have a more appropriate energy mix, and these things take time. It's not going to be overnight. It will take at least a couple of decades for South Africa to have a more appropriate energy mix. There will be gas in that mix, for example. There will be considerable solar, and different new forms of energy and solar technologies are coming up. So in short, we are committed to a very sustainable portfolio of infrastructure projects.
Okay, a very nice long answer, but directly, are you in any way funding green initiatives to secure energy, whether it is in solar, in wind, or in the new IPPs, specifically directed at Eskom and specifically directed in South Africa?
Absolutely. In short, since you asked me to be brief, we will be supporting and are already supporting the renewable energy IPP program in South Africa. We are supporting Eskom, since Eskom is one of the most strategic enterprises in South Africa. As you know, our economy is right now constrained. Our economic growth is constrained by the energy deficit. So for the bank to play a role in stimulating economic growth in South Africa, it is very critical that we are also part of the syndicate of financial institutions providing loans to Eskom. We are also helping Eskom clean up its footprint, its environmental footprint. So one of our loans, for example, is specifically focused on making sure that they can meet the environmental standards at Medupi, which is a coal power project, but using cleaner forms of coal technology. If it was just the traditional coal project, the bank would have been reluctant to support an initiative like that.
Okay. Mr. Maasdorp, let's go to some of the geopolitics that obviously your bank cannot ignore. We've got a massive war between China and the US around currency. And then we've also got, of course, the US's backing out of some of these major multilateral agreements that have been formed around trade, around finance, and around a sustainable world and developing economies within that context. How does the development bank situate itself and navigate such choppy geopolitics that we find in the world today?
If we had 2 hours, I could address some of those, but very interesting question, Karima. I would say, firstly, there's no question that we are living through a period of what one can broadly call sort of very fundamental tensions and strains within the international system as we knew it. So over the last 70 years, broadly, there's been a broadly accepted rule-based multilateral system that works in a particular way. And that system has produced a lot of economic benefits. Many countries have benefited from globalization and from trade. However, there's a lot more inward-looking policies now. We see Brexit, we see the advent of the US looking much more inward and wanting to do more bilateral agreements as opposed to multilateral. So what we are hoping to do now is to look at how we can contribute amongst emerging markets towards a different type of multilateralism. And let me just unpack that in 2 ways. Firstly, we believe that it is important in our financing activities to, as I said earlier on, to finance more local currency loans, which means that we're reducing this dependence on the US dollar. That is the first one. The second important point is that we have to preserve multilateralism. Multilateralism is so essential to the world today. There's no way we can solve the big intractable problems facing the world, whether it's problems of refugees, of climate change, whether it's financial volatility. The financial crisis comes to mind of 2008, for example. You can't solve any of these global problems through individual actions by national regulators or national governments. So this multilateral space has to be protected, and there's a battle going on, a battle raging between those who are looking more inward and more protectionist and those who want to preserve and find a new form of multilateralism. And we in part of the second batch, if you like. Let's
bring it back home to the African continent. Now, this is, of course, a development bank which has the traditional BRICS members, but our intra-Africa trade, South Africa is the most diversified economy on the continent, is very, very low. How does the bank contribute to making it easier, being more agile, being, as you said in your other interview, being more nimble, to finance projects that will give reality to the plans around this free trade agreement, which would, of course, bring economies of scale into place and really put Africa on the map?
Karima, at this stage, as you know, the bank is a very young and a very new institution. We're only 4 years old. The bank also at this stage only still has BRICS countries as members. So that's really just 5 member countries. So as the bank evolves and grows, and the next phase of our development will be, in fact, the bank expanding to invite more countries into the institution. That process will take shape in 2020 and will be guided by the shareholders, by the 5 governments. Mm-hmm. So at this stage, we can only lend and finance infrastructure projects in these 5 countries. Once we have expanded, I think we will play a significant role in creating an enabling environment for greater intra-Africa trade. Because if you just think about it, infrastructure projects, the kinds of things we finance, whether it's building roads or rail, look at the North-South corridor, we need rail lines that can transport iron ore or copper from Zambia right to the port in South Africa, in Durban or Mozambique. We need much more integrated infrastructure. So the bank will be able to finance electricity grid lines that ignores borders, lines, power lines that cross into Tanzania, Kenya, Ethiopia, and to the north, because South Africa is such a powerful economy. There's gas, for example, that has been onshore finds in countries like Ethiopia. South Africa is a big market. We could bring some of that gas and power South Africa. There's major gas finds in Mozambique, South Africa, and the bank can play a role in bringing that as an energy source to South Africa. So over the next few years, the bank will be able to play this bigger role as an integrator of infrastructure across the continent.
As a final word from you, Mr. Maasdorp, how do you make sure that your projects come in on budget and on time? What kind of due diligence do you do? Because we've seen, for example, a member country of the Development Bank, China, actually taking back projects because the local countries are not able to repay and service the debts. The projects are not actually coming in on time, coming in on budget. We've got the issue of corruption. What is your due diligence process?
So a bank like ours, together with the other multilateral banks, we have very, very high standards of governance. So when it comes to risk management and the due diligence that projects have to go through in order to be approved, it is extremely rigorous. So one of the things that we try to do, though, is to make the bank a friendly institution to work with. So we are trying to reduce bureaucratic, processes and streamline and become a lot more sort of nimble, as you said. Give you an example. It doesn't matter the size of the loan. We aim to, and have done so far, to approve all of our loans, and some of these are very big loans of $500-600 million, approve it between 3 and 6 months. In comparable institutions that are much larger than ours, it can take up to 18 months for a loan like that to be approved. But in short, we have the same rigor and discipline in terms of the risk management that the projects have to undergo before we disperse the money from Shanghai to that particular project.
Mr. Maasdorp, thank you very much for that insight into an alternative financial institution directed at developing economies. Still ahead on The Fix, we speak to a panel of journalists about the big stories coming up this week and, of course, what's in the weekend papers.